12 holdings in 5 videos. And in this last video, we're gonna talk about the 3 last holdings in my ASX portfolio, which are Xero, Webjet and VAS, an ETF. So yeah, if you have already watched my previous videos, in these videos I talk about the individual holdings I have in my portfolio. So have a look in all the other videos that I already posted if you want to see the rest of my portfolio. But today we're going to talk about the 3 holdings I mentioned. My name is Michael and we talk about all things related to investing and personal finance. Hit the like button if you like the video and consider subscribing to my channel. That certainly helps me out growing my YouTube channel. And as always at the beginning, a very quick disclaimer. I do not hold a financial services license, so whatever I talk about is my personal opinion. Please do your own research before investing into individual shares. Let's start with my first holding that we discussed today, and that is Xero Limited. It's a New Zealand-based company, and their product is a cloud. So they're basically a cloud software provider, and they have a software in the accounting segment, so an accounting software. They distribute their software globally, it's actually a very impressive growth that they had over the last years. And they are already part of the ASX 50. So under the 50 largest company in terms of market cap, and their market capitalization currently sits just below 13 billion Australian dollars. So already quite a large company, and they do have offices in New Zealand, Australia, but also in UK and North America. So they have already spread across the globe, where you can see that the software is actually being adopted in all different countries. And they're actually offering the software in, I think, over 160 different countries already. So it's actually pretty awesome to see. And as you all know, the software as a service companies and models are doing very well. You basically purchase that software not with a once-off. You basically enter a subscription model with the company, and therefore the company has a recurring revenue, monthly recurring from users. Having a look into a share price as always at the beginning, just to see where the company is coming from and what the past growth was, just to get an idea on where we stand at the moment. When you see the 5-year charts, it's just stunning to see what the company has done in the past in terms of share price appreciation. So from below $20 5 years ago, and now we are over $90 per share that you have to spend if you want to become a shareholder from Xerox. And when we look into the 1-year chart, you can see that there is still an uptrend, and in my view that uptrend will continue to be there. And when we look into the financials later on, we see why that is and why I believe that the company has still so much growth ahead. I mentioned already the market cap is just below $13 billion, makes it certainly a larger company here in Australia and New Zealand, or listed in Australia, but it's a New Zealand-based company. And the PE ratio, if you dare to have a look, it's certainly a little bit scary, because they were just this year able to generate their first operating earnings, and to basically have the first time a year with a profit, to end the financial year with profit. They made a profit of 3.3 million compared to last year 27 million loss. So that's why the PE ratio currently sits at 2,700. So it's just a crazy number. However, it's still a growing company. And when we see the forecast for the earnings per share, so currently it's 3.3 cents per share. Next year there's an estimated 17 cents per share, so it's just a crazy jump. And the year after, 2020, they expect earnings per share of 36 cents, and the year after again doubling to 72 cents per share. And yeah, so you can see the growth is intact, growing their earnings basically 100% each year, which is crazy to see. And the most interesting part I found is the ongoing revenue growth that we see with Xerox. And there, I'll put up a screenshot here from their latest report, and just highlighting the revenue growth in the different countries. We have a revenue growth in Australia of over 23%. We have UK, who is one of the fastest growing markets in their portfolio, with 54% revenue growth. New Zealand with 90% revenue growth. North America with 25%. And the rest of the world, which is also growing really fast with over 43% revenue growth. And that's really just amazing to see. And now that the company is actually becoming profitable, it's going to be amazing to see how much earnings we will see in the future. So certainly a very good investment, and something that I want to hold for the long term. And that brings me also to the section where I talk about what my holding is and when I entered a position into that company. And there, I'm a little bit disappointed with myself because I entered the first time and bought my first position into Xerox back in 2018. Sold off again after a bumpy year with just a little bit over 10% of profit. And back then the share price was, I think it was just below 40 Australian dollars per share. So if I would have held on to the position, I would have gained over 100% in that position. However, I sold the entire position back in 2019, and I became a shareholder again for Xerox back in end of 2019. The average share price that I was able to gain with my purchases was 72 Australian dollars, and that leaves me with price appreciation until now with over 26% on my position. Let's talk about my next holding, Webjet, and that's certainly a bit of a gamble. We obviously all know what the travel industry looks like at the moment, and there's not much travel going on at all, and obviously not many bookings. And it's certainly very hard, it's even harder for the people here in Melbourne, but even in entire Australia, the bookings are obviously not very high at all. And that's obviously very, very hard for a company that is really purely focused on travel and relying on the travel industry. But Webjet has two main products that they offer. That is the B2C business, where they offer, where they basically have online platforms like Webjet, and the other one is Online Republic in New Zealand, where they offer consumers the option to purchase travel straight away to their platform. And the second model that they have is the B2B model, where they basically created a platform where you can connect through with an API, and it's basically a global accommodation supplier. And if you are interested to become a supplier of their a user of their online platform as a company, you basically can hook onto their database and can offer their services through Webjet. Looking into the chart, and that's certainly very hard to look at if you are a long-term holder into the company already for a number of years. So when you see the 5 years chart, we are actually almost back to a level where we were 5 years ago. So when you see it just from a price 5 years ago and now, you would think, oh, there has not much changed. But you could see in the past the revenue growth of the company was actually extremely good and positive. However, obviously in a situation like we have at the moment that is so unpredictable basically, the share price dropped massively, and still the revenue is much higher than it was 5 years ago. So we still need to see how that will turn out in the long term. However, when you see the price of the long term hasn't changed a lot, actually, or it got down a lot, and when you see the 1 year chart, it's obviously the massive down, right? So you can see how much the price actually dropped. So as I said, it's a gamble position. And when we look into the financials, they obviously do not look very good at all. The earnings per share for the last reporting season was minus 52 cents to 56 cents per share, compared to over 40 cents per share that they had as earnings. The revenue was down 40% in the last reporting season, and to be honest, I believe that actually will go further down, because it was obviously just half a year where they had a massive decrease in their bookings. They are, however, in a financial stable situation at the moment, because they offered shares back in April, and they basically raised almost 350 million Australian dollars to stable their financial situation, and they also took on debts for over 160 million Australian dollars back in July. So the financial situation is certainly stable, because they raised a lot of money to make sure that they actually survive the current hard situation. Question is, how quickly can the travel industry recover? I certainly believe that services like the ones that Webjet offers will actually have a positive uptake as soon as the travel industry will reopen again, because everything is online, all bookings will be online, you don't need to go into a store, and obviously Webjet is someone who had not the overhead of cost in maintaining actual stores as such as, for example, Flight Centre has to do at the moment. So certainly in a much better position as some other travel industry partners, because everything is online. However, still very tricky, and we still have to see how it turns out. Again, gamble position, very uncertain. However, I took the risk with a very small position in my portfolio. As I said, I got into that position very recently in May. I paid around $4.06 Australian dollars per share. It actually got down from there quite a bit in July. However, it's almost now at the same level, so my current position is at minus 5%. So not a big paper loss there at all. And again, we'll just have to see how it will turn out. Yeah, and talking about the one ETF I have, or actually now I have to say I had in my portfolio, because I sold my position in VAS just recently. And why did I do that? My approach is to outperform the market with finding companies that I believe are in a better financial position and do have a brighter future than the overall market predicts for all companies, or the average company would be able to achieve. With company, for example, like Xero. And that's why I sold my position in this ETF, to make sure I allocate this money into companies where I actually think that they will outperform the market. In general, I believe ETFs are a very, very good instrument, especially for people that want to invest regularly and that want to invest long term, and they do not want to spend time to actually research individual companies. But I pretty much enjoy that process as well, so it's not hard work for me. I actually enjoy looking into those companies. So yeah, no ETF anymore in my Australian portfolio. Really quickly recapping Xero, I mentioned already, great company, and I want to hold on to it for a very long time. I see the earnings in the next couple of years just getting higher and higher, and we have a great earnings growth rate ahead. Webjet, gambling position, we'll just have to see how it will turn out for me. And VAS, reduced my position in VAS, or actually eliminated it, because I don't want to be invested in ETFs anymore, at least not with my Australian portfolio, because I just have a different approach here. Yeah, those were the 5 videos about my individual holdings. I hope this was interesting to you. Have a look into all the other videos I shared already. And the next video is certainly going to be a little bit shorter again, and they're going to have one topic, ones-off videos. One of my next videos you can expect a little bit about how to research companies and what tools I'm using. And I hope they're going to be a little bit more practical again. Thanks for watching this video. Don't forget to like that video, and I'm going to see you in the next one. Until then, bye.